In today's episode, I'll talk about two stories. The first story is a small tribute to Dr. Manmohan Singh from Team Daily Brief, who passed away last week on the 26th of December. And in the second story, I'll talk about how the MSME or the micro, small, and medium enterprises sector of India is currently facing some problems with respect to access to credit. Welcome to the Daily Brief show by Zerodha, where our aim is to cut through the noise and simplify the biggest news in the financial markets in a way that is easy to understand, yet one level deeper as compared to traditional news channels. I am your host Anurag Bansal, and today is Monday, the 30th of December. Look, last week on December 26th, India lost one of its greatest modern leaders, Dr. Manmohan Singh. Now, you've probably heard a lot about Dr. Manmohan Singh in the past few days. He was a towering figure in a public life for many decades, and his work had both admiration and criticism. But even with all of these tributes that have been on the internet so far, his legacy is usually misunderstood, to be honest. Now, most of us understand and know that he was very crucial to India's economic story, but the why exactly is still very unclear to most of us. So today, let me break it down for all of us. See, Dr. Manmohan Singh, to say the least, was a pioneer in economics. He was born in the year 1932 and he grew up in a world where most people believed that India's economy was not strong enough to compete globally. Now, many people thought that we could only grow by keeping foreign businesses out. And this was not just an Indian idea, by the way. Experts around the world believed that developing countries should protect their economies. So after independence, India started to embrace this model. We planned our way to development. But the problem is that the results didn't quite match the ambition. Growth was too slow, and instead of questioning the system, most people started to blame external factors. Even as a young scholar, Dr. Manmohan Singh started to question this particular approach. Even during his time at Oxford University, he refined these ideas under his mentor, Dr. Ian Little, who was challenging the status quo. In his 1962 PhD thesis, Dr. Manmohan Singh argued that India's obsession with cutting imports was holding us back. He believed that trade was essential for real progress in the country. But India was not quite ready to change back then. And for the next 30 years or so, we stuck to the very same policies. And in that time, Dr. Singh worked his way up through the government. He was often a lone voice who was calling India to rethink its economic strategy. Through papers and speeches, he usually argued that India needed to open up to the world. But slowly, some people in the government started listening to him. But the real change still was very politically tricky. India had followed a socialist model for so long that reform felt very, very risky. While the government made small adjustments, it could not openly commit to big changes out there. And meanwhile, problems kept building up. By 1991, a crisis hit our country. See, through the late 80s, India's import bills had soared and we took big loans to build infrastructure. Money was constantly leaving our country, but our tightly controlled economy could not attract enough foreign investment at all. Now, by the end of the decade, we were in some serious trouble. And right then, two shocks made things much worse. A war in the Middle East drove oil prices up, and the Soviet Union, which was our biggest trading partner, entirely collapsed. Inflation shot up to nearly 15%, and we in India ran out of foreign reserves. Now, with no other choice left, we turned to the IMF or the International Monetary Fund. They agreed to help, but with some conditions. India had to change how it managed its economy. Now, this was much easier said than done. The Chandrasekhar government tried to introduce some reforms, but the parliament blocked the budget. The government collapsed, elections were called, and Congress came into power in June 1991. India at that time was at the edge of an economic collapse. And in this critical movement, Prime Minister P.V. Narasimha Rao made a very, very interesting decision. Instead of giving the finance ministry to a politician, he actually chose Dr. Manmohan Singh, who was an economist with a very good reputation. Now, Dr. Manmohan Singh's first task here was to stabilize our economy, and it took some tough and very unpopular steps to do so. He devalued the rupee by over 20% and let its value drop significantly. He also mortgaged India's gold reserves. And needless to say, the sight of Indian gold being flown abroad had angered many people, and the public was absolutely furious at him. And because of all of these controversies, Dr. Manmohan Singh had almost quit, but the then Prime Minister refused to let him go. But despite all this outrage, these steps gave India some breathing room. And then came the real game changer, Dr. Singh's first ever budget. Now, everyone expected him to play it safe, which was to cut spending and conserve resources. But instead, what he did was that he presented a bold vision to completely transform India's economy. The night before the budget, he introduced what is called the new industrial policy that dismantled much of the license raj. In his budget speech, he pushed for reducing subsidies, privatizing public sector companies, attracting foreign investments, and reforming banks and capital markets. Over the next few years, these reforms kept going. Dr. Manmohan Singh also greatly shaped India's financial markets. He strengthened the SEBI, opened up the mutual funds industry, and laid the groundwork for NSE or the National Stock Exchange. Now, for India, these were revolutionary changes to say the least. Dr. Manmohan Singh's reforms did not just meet IMF's demands, they also went far beyond them. After over 40 years of isolation, India was now ready for global business.
Sir, our party is an inheritor of great traditions of national service. True to this heritage, we commit ourselves to providing a firm and purposeful sense of direction to the reform process so that this ancient land of India regains its glory and rightful place in the comity of nations.
Now, for any of you who is watching or listening to this who was born after the 1990s like me, it is very hard to imagine what the 1991 reforms actually meant. But the thing is, they shaped the India that we live in today into a stronger, more prosperous, and more connected to the world country. And these reforms created a new middle class and brought India much closer to the global stage, both economically and culturally. Now, back to Manmohan Singh's career as a politician, one decade later in 2004, he was unexpectedly, so to speak, sworn as India's Prime Minister. Now, this was almost as surprising as his elevation to Finance Minister in 1991. Now, in the beginning, India made huge strides under his leadership. The economy grew at its fastest pace in multiple years. He also introduced key policies like the Manrega and the RTI, and he also took the big risk by building closer ties with the US by laying the groundwork for today's strong relationship. But the last few years or so of his prime minister job were very, very difficult. There were some age and health related problems, including a major heart surgery in the year 2012. Dr. Manmohan Singh then started to struggle to manage the internal and external politics that were going on around him. And probably because of all of this, by the end of his term, his government was almost overshadowed by controversies and a lot of chaos.
जैसा मैंने कई बार कहा है, मेरा सार्वजनिक जीवन एक खुली किताब है. मैंने हमेशा अपनी पूरी क्षमता से अपने महान राष्ट्र की सेवा करने की कोशिश की है.
And very popularly, at one of his lowest points where he was facing constant attacks on his legacy, Dr. Manmohan Singh very famously said that history would be kinder to him than his critics. And now, as he passes away into history, it is very, very clear why Dr. Singh built the foundation for modern India's economic strength. Without him, honestly, our economy would be a shadow of what it is today. There would be no stock markets as we know them and no Zerodha as well. So from all of us at Zerodha and Team Daily Brief, we hope Dr. Manmohan Singh rests in peace. Now let's move on to the next story of the day and talk about how Indian MSMEs are having trouble getting access to credit. See, when we think of Indian businesses, certain names almost always come into our mind. Tata, Birla, Ambani, etc. Now these are the biggest players that dominate our headlines and control boardrooms as well. But I'll tell you the thing, the real story of India's economy is not just about these giants. Behind the scenes, there are some unsung heroes who are quietly working to keep the entire system running smoothly. These are the micro, small and medium enterprises or MSMEs, which are often like the backbone of India's economy. And also rightly so. Let me give you some numbers. MSMEs contribute to about 1/3 of India's GDP. That is a significant chunk of the economy coming from businesses that are small in size but massive in impact. They also account for about 40% of India's exports and provide jobs to over 22 crore people. Imagine this, out of every 100 people working in India, nearly 25 to 30 people owe their livelihoods to MSMEs, and that is a huge number. I'm not even talking about one or two enterprises. There are 6.3 crore MSMEs across our country. That is millions and millions of businesses that are creating opportunities, driving local economies, and even making their mark on global trade. But the thing is, there is also a bit of a twist here. Despite the importance of MSMEs, they are facing some challenges that are making their journey far from smooth today. Sure, yes, MSMEs work hard, they innovate, and they also contribute to the economy immensely, but today they are up against some obstacles that can feel mountainous. And one of the biggest hurdles over here is access to credit. Now, some of you might ask me, what does that even mean? Look, credit is essentially the money that businesses borrow in order to expand. They buy equipment, pay their staff, or simply keep things running. Now, without credit, many MSMEs cannot even grow, compete, or even survive in some cases. Now, the trouble for most of MSMEs is finding a reliable source of credit, and that is becoming incredibly difficult over time. Let me break this down even further for you. See, when MSMEs need funds, they usually have two places to look at. One is what we call non-institutional sources. These include borrowing from local money lenders, friends, family, etc. And while these loans might be easy to get, there is a catch here. The interest rates can be so high that they end up crippling the business altogether. Imagine borrowing money to grow your business but then spending most of your profits just to pay back the loan. It is just a vicious cycle that people get stuck in. But the other option here is institutional resources. Now, these are formal channels like banks, NBFCs, or even angel investors and venture capitalists. And ideally speaking, this is where MSMEs should be getting their funds. You might ask me why? That is because these sources are regulated by bodies like RBI or the SEBI, which means that the terms are generally fairer and interest rates are generally lower. But the harsh reality here is that most MSMEs are not able to access these formal channels today. A massive 93% of MSMEs either self-finance their operations or go without any financing at all. Only about 5% of them manage to secure funds from institutional sources, while another about 2% rely on non-institutional sources. That is about it. And this gap is not even small. According to a report by RBI, MSMEs face a credit shortfall of 20 to 25 lakh crore Indian rupees. That is how much money they need, but they cannot get their hands on. You might be asking me, why does that happen? See, the problem has two sides to it. On one side, we have some supply issues. Even when an MSME has a profitable idea or a business model, lenders are usually hesitant to give them loans. And this is because many MSMEs do not have proper financial records or enough collateral to secure a loan in the first place. Lenders also see these businesses as risky because they are small, informal, and sometimes not even registered formally. But on the other side, we have the demand issues. See, many MSMEs do not even try to get loans because they know they will be turned down. They might lack credit scores, formal registrations, or even basic financial documentations. And without these, banks are very unlikely to take the risk of lending money to them. It is a very classic case of being stuck in a loop. MSMEs cannot grow without credit, but they cannot get credit because they are too small or informal. Now, recognizing the importance of MSMEs, both the government and the RBI have now stepped in to try and address these challenges. The government has doubled the budget allocation for Ministry of MSMEs, and they have also introduced various schemes to support this sector. The RBI as well has been very proactive over here because they have launched several initiatives to make credit more accessible to them. One such initiative over here is the Priority Sector Lending or PSL. Now, under PSL guidelines, banks in India are required to allocate a specific portion of their funds to micro enterprises. Now, this ensures that smaller MSMEs have a dedicated pool of money that is available for them. Another significant step that is taken is the policy of collateral free loans for amounts up to 10 lakh rupees. Now, this removes a major barrier for small businesses which do not have access to pledge anything. Then there are also technological solutions like the Trade Receivables Discounting System or the TREDS, which allows MSMEs to get early payments or their invoices. You can think of it as a way to unlock money that is stuck in pending payments from buyers. Then there is also the Account Aggregator or the AA framework, which integrates data like GST filings in order to help lenders assess MSMEs' financial health a little more accurately. Now, all of this makes it easier for businesses without any traditional track records in order to secure loans. In 2023, the RBI even piloted something that is called the Unified Lending Interface or the ULI, and the reason for this was to simplify and speed up the loan process. By automating credit assessments, this digital-first approach makes borrowing quicker and more aligned with the needs of MSMEs. In addition to this, the RBI has also introduced a revival framework to help struggling MSMEs restructure their loans and get back on their feet. But the thing is, this system is not just about what is done for for MSMEs, it is also about what MSMEs can do for themselves. Formalizing their operations is a crucial first step. Registering on portals like Udyam, filing GST returns, and maintaining clean financial records can go a long way in building credibility for these companies. Lenders need to see that an MSME is a serious player and not a risky gamble for them. Credit discipline is another essential habit over here. Choosing the right kind of loan, using it responsibly, and also repaying on time eventually can help businesses build a strong credit score. Investing in capacity building like attending financial literacy programs or using fintech tools can also make a huge difference in this regard. Also, leveraging platforms like TREDS in order to ensure timely payments can improve cash flow and relationships with money lenders for sure. So, if I were to summarize, the road ahead for MSMEs is no doubt challenging, but the thing is, it is also full of potential. MSMEs are too important to fail for this country. They are not just businesses, they are lifelines for millions of people, like I mentioned before. So, by working together, whether it is policymakers, financial institutions, or the MSMEs themselves, we can all bridge the credit gap and unlock the full potential of this very, very important sector. On that thought, let's move on to the final section of the day and talk about the quick news tidbits. First, Mankind Pharma has partnered with Innovent Biologics to bring advanced PD-1 immunotherapy drug to India within the next 3 years. With the Indian oncology market valued at about 8,000 crore rupees, this marks Mankind's first collaboration with a Chinese firm for novel biologics. Second, IndusInd Bank is set to auction 1,573 crore rupees in non-performing microfinance loans with a reserve price of 85 crore rupees, which is just 5.04% of the outstanding value. The microfinance segment, which accounts for 32,723 crore rupees or 9% of the bank's loan book, saw a contraction and lower contribution to margins, impacting the bank's profitability. Third, Jubilant FoodWorks, which is the master franchise for Domino's and Dunkin' Donuts in India, has signed an MOU with Coca-Cola India to procure its sparkling beverages starting 1st April. This comes shortly after Coca-Cola announced selling a 40% stake in its local bottling unit, Hindustan Coca-Cola Holdings, to Jubilant Bhartiya Group. Coca-Cola's portfolio, which includes brands like Sprite, Thums Up, and Limca, will now be available across all of Jubilant's restaurant chains. That's all the news and stories I have for you today. I hope you enjoyed the show and maybe learned something new from it today. As usual, this is your host Anurag Bansal signing off. I will see you in tomorrow's episode. Take care and goodbye. Disclaimer: this content is for informational purposes only. None of the stocks, brands, or products mentioned are recommendations or endorsements.